Hey everyone, welcome to another episode of Investing Kev. In today's episode, we're going to take a look at a stock that's rising in the restaurant industry. This is a place where coffee addicts like to go to, none other than rising star Dutch Bros, ticker BROS. Together, we'll take a look at their company overview, their financials, their outlook, their risk factors, their price target, and I'll wrap it up with my final thoughts. For full disclosure, I do not own Dutch Bros. I've never gotten coffee at Dutch Bros, but I do drive by consistently and I do see the popularity. If you like my content, please give this video a thumbs up, subscribe, and let me know in the comments what you think. Alright everyone, grab yourself a cup of Dutch Bros, sit back, and let's get started. Look at their company profile. Dutch Bros is a high-growth operator and franchisor of drive-thru shops that focus on serving high-quality, handcrafted beverages with unparalleled speed and a superior service. It was founded in 1992 in Grants Pass, Oregon. While espresso-based beverages are still at the core of what they do, Dutch Bros now offers a wide variety of unique, customizable cold and hot beverages that delight a broad array of customers. They are dedicated to making a massive difference in the lives of their employees, customers, and communities. Their combination of handcrafted and high-quality beverages, their unique drive-thru experience, and their community-driven people-first culture has allowed them to successfully open new shops and continue to share the Dutch love at 538 locations across 12 states as of December 31st, 2021. Looking at their financials, Dutch Bros had their stock IPO back in mid-September. We're limited to their quarterly report, which happens to also be their fiscal year 2021 results overview. I want to take a look at their Q4 2021 earnings slides. Looking at 2021, they had 538 shops. Out of the 538, 271 were company operated and 267 were franchised. Looking in 2021, they had $498 million in revenues. $404 million came from company operated shops and $94 million came from franchised. This is a compound annual growth rate of 38.8%. Looking at their company operated shop contribution margin, in 2021 they're at 25.1%. This is a slight decrease from 28.7% from 2020, but in general the trend is trending up. And in 2021 they had a net income loss of $121 million. But if you look at adjusted EBITDA, it's been going up every single year from $40 million in 2018, $49 million in 2019, $70 million in 2020, and $82 million in 2021. They've had 3 decades of consistent new shop growth. In 2011 they're at 172 shops. In 2017 they're at 292, and in 2021 they're at 538. From 2021 to 2016, they were averaging 20 shops ads per year. From 2017 to 2021, they were averaging 52 shop ads per year. Looking at their Q4 2021 business snapshot, they had total revenues of $140.1 million. This is a 55.8% year-over-year increase. Their company-operated shop sales were at $114.2 million. This was a 66.1% year-over-year increase. Their system-wide same-shop sales were at 10.1%. They've had a system-wide same-shop sales of 15.3% when compared to 2019. Their company-operated shop gross profits was at $16.1 million. Their company-operated shop contribution was $21.4 million. Their net loss for Q4 was $9.8 million, and their adjusted EBITDA was $13.3 million in Q4. And when you look at their typical shop sales seasonality, Q2 and Q3 are definitely their winners. Q2 and Q3 are definitely the spring to the early fall time. What I find really cool is their shop margins evolution over time. When we take a look at their gross margin percentage progression, from Q1 they are definitely at a loss. When we look at Q1, the gross margin percentage progression is definitely in the negatives, but they quickly bounce back in Q2, Q3, and Q4. I also want to take a look at some other things that stood out from their financial results. Dutch Bros is currently one of the fastest growing brands in the food service and restaurant industry in the United States by location count. And this is what the CEO had to say. 2021 was a fantastic year for Dutch Bros. We started the year with the launch of the brand in Texas, which was a major milestone for the company. Led by talented pipeline of regional operators and longtime franchise partners, unit growth accelerated to 98 new shop openings. Revenue grew 52.1% and same shop sales increased 8.4%. 2021 was the year we converted customers from a long-standing paper-based stamp card loyalty program to the Dutch Bros app, which grew to 3.2 million members. In 2022, we celebrate Dutch Bros milestone 30th anniversary. We also begin our expansion east with our entrance into Nashville. While our history shows we're a well-established and respected brand, we are still in the early stages of our long-term story. 2 years ago, we entered 2020 with just 370 shops in 7 states. We finished 2021 with 538 shops in 12 states. Importantly, new shops are opening at higher average unit volumes than the system average, including the new markets. In 2022, we have committed to opening at least 125 new shops, supported by a robust pipeline and strong consumer acceptance of Dutch Bros. Over the next 10 to 15 years, we foresee at least 4,000 shops across the United States. Looking at the full year 2022 outlook, their total system shop openings are expected to be at least 125, of which at least 105 shops will be company operated. That would put them around 660 locations by the end of 2022. Their total revenues are projected to be the range of $700 million to $715 million. In 2021, their total revenues were at $498 million. This would be an increase of 40 to 43% year-over-year growth. Their same shop sales growth is estimated in the mid-single digits. Their adjusted EBITDA is estimated to be in the range of 115 million to 120 million, and their capital expenditures are estimated to be in the range of 175 million to 200 million dollars. I also like to see their total assets being more than their total liabilities. Their total assets were 554.9 million dollars. Their total liabilities were at 344.7 million dollars. When I look at the outlook of Dutch Bros, their growth acceleration is a major thing. Opening 125 shops by the end of 2022 is huge. Their target goal of 4,000 shops in the next 10 to 15 years means that they'll be averaging between 200 to 300 shop openings per year. This is anecdotal from my experience, but I have friends who love Dutch Bros. Every time I drive by one of their locations, it's always packed. When we look at the overall trends of the coffee industry, I want to take a look at both domestic and international. Look at this article from MarketWatch. The North America specialty coffee market is expected to grow by 8.2% annually in the forecast period. They will reach $23.3 billion by 2026. This is driven by growing demand for on-the-go coffee and strengthening premium coffee shops, despite the COVID-19 pandemic. Looking at Statista, the revenue generated in the United States alone by 2025 will be at $102.5 billion. This is a total combination of instant coffee and roast coffee. And when we take a look at the international market, I don't know if Dutch Bros will ever go international. If Dutch Bros ever decided to go international, they'd enter a market that will continue to want to get their coffee fix. The espresso coffee market is expected to grow by $3.1 billion from 2020 to 2025. And looking at the global cold brew coffee market from 2021 to 2025, the market growth will accelerate at a compound annual growth rate of 26.44%. This would be an incremental growth of $1.4 billion. The growth contributed by North America is at 57%, and the growth for 2021 was at 26.24%. Looking at the risk factors, competition is definitely their biggest one. They are currently expanding east, and they're going to encounter coffee chains that are already established in the Midwest and East Coast. They'll be competing against giants like Starbucks and Dunkin Donuts. They'll be competing against smaller brands like Pete's Coffee and Caribou Coffee. They'll be going against small businesses, places that have already established themselves in the communities and states. We'll see how it goes, but they're expanding quick and they do have a cult following. Another risk factor is just economic health. Restaurants are considered a consumer cyclical, and an economic downturn can definitely impact people going out. Though in my personal opinion, coffee is such a staple in people's lives. It's quick and convenient, and it's along the way for people's drive to work. Even though we've been in a pandemic and inflation has been hitting people hard, Dutch Bros is still powering through. I guess when we witness a real prolonged economic downturn, we can definitely assess then, but I honestly don't know if an economic crash will make a massive dent into Dutch Bros. That's just my personal opinion. Looking at their 12-month price target from TipRanks, 6 analysts have given their rating, with 5 of them saying it's a buy and 1 saying it's a hold. The average 12-month price target is $63. This is a 38% upside from its current price of around $45. The highest price target is $72, and the lowest is $53. Looking at CNN, 8 analysts have given their price target, with the median being $64.50, which is around a 41% upside. The highest is $85 and the lowest is $53. Looking at the stock chart, within the past year, they've been up 24.73%, which is a non-dollar increase. Their 52-week high was $81.40, and their 52-week low was $32.42. Currently, looking at their year-to-date, they've lost around $6.70. This is a 12.7% decrease. All in all, I'm very interested in Dutch Bros. I'm adding this stock to my watch list. I own very few restaurant stocks out there, but I can definitely see why Dutch Bros is appealing to a lot of investors for the long term. 4,000 stores in 10 to 15 years shows a lot about the confidence this company has alongside its growth strategy. I think they have a loyal fan base, and that's only going to grow as more time goes on. Competition is tough, but when you have a product that's addicting and consistently good, people are going to come no matter the good times and bad times. McDonald's, Starbucks, Coke, Pepsi all have people hooked. People love coffee, and if Dutch Bros can execute their vision well, they're going to continue to see huge year-over-year increases in their revenues and net income. I believe this company will be a financially sound company. If you like this breakdown, please give this video a thumbs up, subscribe, and let me know in the comments if you're a shareholder of Dutch Bros or if you're now interested in the stock. I rarely ever drink coffee, but I'm very tempted to go check out the nearest Dutch Bros. If you have any recommendations on what you usually get, let me know in the comments. As always, thank you for tuning in, stay safe, and I will see you all next time.